Welcome back to Gold Rush Reporter, your trusted source for real insights into gold, silver, and the global economy. Today, we're diving into what could be one of the biggest shifts in financial history. The winds are changing fast, and those who understand the signs early will be the ones standing strong when the storm hits. So stay with me till the end, because what I'm about to show you will completely change how you see gold and the global economy. Right now, the world is quietly but clearly moving away from the US dollar. The recent surge in gold prices isn't just another trading pattern or market bounce. It's the reflection of something much deeper. Central banks across the world, especially in the East, are stacking gold like never before. China, Russia, India, and several Middle Eastern nations are leading the charge. These countries are not just buying gold for safety. They are building a new financial order. One where gold could once again become the ultimate reserve asset. For years, the US dollar has been the world's dominant currency. But that power is built on trust. And right now, that trust is starting to break down. The US debt has reached unsustainable levels. The government keeps printing money to fund deficits, and the Federal Reserve is trapped. If they raise interest rates, they risk crashing the economy. If they lower them, inflation will roar back. Either way, it's a losing game, and global investors are realizing it. This is where gold comes into play. Unlike fiat money, gold can't be printed, faked, or inflated away. It holds value across borders, across time, and across crises. That's why when countries or investors start to lose faith in currencies, they always turn to gold. What we're seeing now is a large-scale confirmation of that shift. And it's not just retail investors buying coins or bars. It's nations preparing for a new system. China, for instance, has been quietly reducing its holdings of US treasuries for years, while ramping up gold purchases month after month. Russia has already cut most of its dollar reserves and now backs a major portion of its national reserves with gold. Even countries that once depended on the dollar for trade are looking for alternatives. This is what analysts refer to as de-dollarization, and gold is at the center of it. Now, think about this. If global trade starts settling in other currencies backed by gold, the demand for US dollars will drop sharply. That means less global demand for US debt, and as a result, America's ability to fund its deficits by printing money will weaken. This is exactly why gold's price is surging. It's responding to the decline of trust in fiat systems. For investors, this is both a warning and an opportunity. The warning is clear. The financial system we've known for decades is changing, but the opportunity is even greater. Those who position themselves early in real assets like gold and silver could benefit from this massive realignment of wealth. As a gold analyst, I see this as the early stage of a long-term move, not a short-term spike. When the global financial tide shifts, it doesn't happen overnight. It builds slowly, then suddenly all at once. So, if you've been watching gold climb and wondering whether it's too late, it's not. We're still in the beginning of something much bigger. In the next part, we'll explore how major economies are reshaping their monetary strategies and why central banks are racing to accumulate gold before the new financial era takes full shape. You won't want to miss it, because what's coming next could redefine the entire global market. As we continue this breakdown, let's dig deeper into how central banks are quietly preparing for what could be the biggest financial reset in decades. What's happening behind the scenes is no coincidence. It's a deliberate, coordinated shift in global monetary power. And gold is right at the center of this transformation. Over the past few years, we've seen record-breaking gold purchases by central banks. According to global reports, last year alone, they bought more than 1,000 tons of gold. the highest amount in modern history. But here's the key detail most mainstream analysts are missing. These are not just random purchases. These are strategic accumulations, part of a long-term plan to reduce dependency on the US dollar and protect national wealth from Western financial risks. Countries like China, Russia, Turkey, and even smaller nations in Asia and the Middle East are all participating. China's central bank has added gold to its reserves every single month for over a year now. Russia has built up a stockpile that makes its currency one of the most gold-backed in the world. Even Saudi Arabia, traditionally tied to the US dollar through oil, is showing signs of diversifying its reserve structure. These moves aren't just economic, they're geopolitical. Think of it this way. Every ounce of gold a nation adds to its reserves strengthens its financial independence. In a world where the US uses the dollar as a tool for sanctions and control, many countries want alternatives that cannot be frozen or manipulated. Gold fits that description perfectly. It's neutral, universally accepted, and free from the influence of any single government. This is why nations are quietly shifting their balance sheets toward hard assets. Meanwhile, the Western world continues to rely on printed money and debt-based systems. The Federal Reserve, the European Central Bank, and others keep expanding their balance sheets to support slowing economies. But this approach is only short-term relief. Each new round of money printing erodes confidence in fiat currencies, pushing investors and nations alike toward gold. It's a self-reinforcing cycle. The more they print, the stronger gold becomes. At the same time, a silent competition is emerging between East and West. The East, led by China and Russia, is positioning for a system where trade and reserves are backed by tangible value. The West is still clinging to a credit-based model built on trust in paper money. Eventually, one of these systems will prove more stable, and all signs point to gold as the anchor of the future. We can already see this shift reflected in trade deals. More countries are settling transactions in local currencies or in gold, bypassing the US dollar completely. For example, China and Brazil recently signed agreements to trade directly in their own currencies. India is exploring gold-linked payment systems for energy trade. These may sound like small steps, but when you connect the dots, a clear trend appears. The world is slowly moving toward a multipolar financial system, where gold plays the central role once again. For ordinary investors, this shift means opportunity, but only if they recognize it early. While governments are accumulating tons of gold, retail investors still have access to affordable physical silver and gold coins, ETFs, and mining stocks. Once the new monetary order takes shape, prices could reach levels most people can't imagine today. So, what does this mean going forward? It means gold isn't just a safe haven anymore. It's becoming the foundation of future global finance. In the next part, we'll explore how global trade patterns and currency realignments are setting the stage for a possible gold-backed international system, and why this might mark the beginning of a new financial era. Now let's move to the next big development, the growing conversation around a gold-backed international system. This idea, which once sounded outdated or impossible, is now being quietly discussed by global policymakers, economists, and major financial institutions. The logic behind it is simple. The world needs a form of money that is stable, trusted, and free from political manipulation. And gold is the only asset that fits that role. For decades, the US dollar dominated global trade because it was backed by confidence in the American economy. But over time, that confidence has been replaced by debt, deficits, and endless printing. When you have trillions of dollars being created out of thin air, value becomes an illusion. And the rest of the world is starting to wake up to that reality. That's why countries are seeking something real to underpin their financial systems again. Imagine a system where trade between nations is settled not in dollars, but in currencies, partially backed by gold. This doesn't mean a full return to the old gold standard. It means creating a hybrid model where gold serves as the foundation for trust between trading partners. China and Russia have already taken steps toward this idea by developing settlement systems that can function independently of Western banks. In parallel, BRICS nations are exploring ways to create a shared trading currency that's linked to gold or other commodities. If that happens, we could be witnessing the early stages of a monetary revolution. A world where gold once again determines the flow of global wealth, not political decisions or interest rate policies. For example, if a BRICS currency backed even 20% by gold were to emerge, it could immediately challenge the dominance of the US dollar in international reserves. That alone would shift trillions in capital and potentially redefine how trade is conducted. We can already see hints of this change in how energy is being priced. Several oil-producing nations are now open to selling oil in currencies other than the US dollar. If a gold-linked settlement system gains traction, countries could soon exchange gold-backed currency units for oil, gas, or food, creating a commodity-linked global economy that bypasses the dollar completely. This would fundamentally alter how global markets function. But here's the catch. Such a transformation won't happen overnight. It's a gradual process that will take years to fully unfold. Yet, investors who understand what's happening now can position themselves ahead of time. Gold, silver, and related assets could see demand and value skyrocket as nations race to accumulate reserves before a new standard is officially established. From a macroeconomic standpoint, this transition makes perfect sense. Fiat currencies are losing purchasing power year after year, while gold's limited supply ensures its value remains intact. Every time inflation rises, every time debt grows, and every time central banks intervene, gold's importance strengthens. It's not about speculation anymore. It's about survival in a fragile system that's slowly running out of credibility. Even the IMF and BIS, two of the most influential global financial bodies, have quietly acknowledged the need for a more stable monetary structure. They know the existing debt-based model cannot last forever. When too many nations lose trust in paper promises, something solid must take its place. And that something is already being stacked in vaults from Shanghai to Moscow. For the Gold Rush Reporter audience, the takeaway is clear. We're not just watching market noise, we're witnessing the early framework of a new global currency system, one that values substance over promises. In the next part, we'll break down how this transformation is already reshaping the banking world, how liquidity crises are accelerating this shift, and why every investor needs to understand what's coming before it becomes reality. Now, as we move further into this analysis, it's important to look at how the banking system is beginning to feel the pressure of this global financial realignment. The cracks are not obvious to everyone yet, but they are widening beneath the surface. Central banks may be preparing quietly, but commercial banks, especially in the West, are showing signs of deep structural weakness that could soon become impossible to hide. One of the biggest red flags is stagflation risk. The combination of stagnant growth, rising inflation, and high debt. The Federal Reserve's own stress tests don't even account for this scenario. They assume recessions with moderate inflation, not a sustained period of both inflation and contraction. That's because, if they did, most major US banks would fail those tests outright. The truth is that the banking sector is far more fragile than it appears. We saw the first hints of this in 2023 and 2024, when several mid-sized US banks collapsed due to rising interest rates. Those were just the small players, the canaries in the coal mine. Larger institutions have been quietly shifting portfolios, dumping long-term bonds and scrambling for liquidity to survive the next tightening cycle. Yet, even as the Fed lowers short-term rates to ease the pressure, long-term yields are climbing. That's a dangerous signal. It means investors are losing confidence in the US government's ability to control inflation or sustain its debt without devaluing the dollar. Peter Schiff's warning captures this perfectly. Gold's surge is not just about price speculation, it's about confidence erosion. The metal is reflecting fear in the system. Fear that money printing, fiscal irresponsibility, and political manipulation have reached breaking point. Once confidence fades, it doesn't return easily. And when that happens, banks face a new problem: deposit flight. In an environment where people lose faith in fiat money, they seek safety in real assets: gold, silver, land, or even foreign currencies backed by stronger fundamentals. The more deposits leave the system, the tighter liquidity becomes. That forces banks to borrow from central banks, increasing dependency and exposing systemic weakness. It's a slow-moving crisis that builds quietly until one event triggers panic. Meanwhile, governments are pretending everything is fine. Official inflation numbers remain understated due to manipulated data and outdated formulas. But consumers feel the truth every day: rising costs, shrinking savings, and falling real wages. When people realize that the 2% inflation target is nothing more than political theater, the credibility of both the Fed and the Treasury will take another hit. At that stage, the only remaining solution will be massive money printing. Again, quantitative easing, bond purchases, and liquidity injections will return under new labels like financial stability programs or market support facilities. But make no mistake, these are just modern words for inflationary bailouts. And every round of money printing weakens the dollar further, driving gold and silver higher. At the same time, Wall Street and major US media outlets are still dismissing this shift. They're labeling gold's rise as an overreaction or a temporary spike driven by fear. But history tells us that every time experts call gold overbought, it's because they don't understand what it's signaling. Gold doesn't rise because traders are excited. It rises because confidence is dying. We've also reached the point where policy credibility is almost non-existent. Central banks are openly contradicting themselves, cutting rates in the face of rising inflation and expanding balance sheets while promising fiscal restraint. These contradictions expose the truth. The system is being held together with political messaging, not real economic strength. This is why Schiff and other analysts believe that we're on the verge of a structural transition similar to the early 1970s, when the world left the gold standard. But this time, we're heading in the opposite direction, back toward gold, as the foundation of global trust. Only this time, the shift isn't led by the United States, but by the rest of the world rejecting US dominance. The consequences of this move will be enormous. Asset prices, interest rates, and even geopolitical alliances will change as nations adjust to a post-dollar world. Investors who understand what's coming are positioning themselves in gold, silver, energy, and productive land. Assets that will retain value in a world where paper promises fail. In the next and final part, we'll conclude with what this reset truly means for investors, the timeline of this transformation, and how to interpret gold's current price movement as a signal of the future monetary order. variant, standard, ID 53641, title, Gold Rush Reporter, final part with channel outroll, the new era of gold. We've now reached the final stage of this analysis, the power point of no return. For the global financial system, everything we've discussed, from the collapse of trust in fiat currencies to the quiet accumulation of gold by central banks, leads to one conclusion. We are witnessing the early chapters of a new monetary era, where gold once again takes its rightful place as the foundation of value. Right now, the world stands divided. On one side, Western economies are drowning in debt, printing more currency to pay off old obligations and inflating away the savings of their citizens. On the other side, the East, led by China, Russia, and parts of the Middle East, is consolidating real wealth through tangible reserves. They're not guessing, they're preparing. These nations are building financial systems backed by hard assets, not promises. And here's the striking part. This isn't about ideology or politics, it's about mathematics and reality. Debt-based systems eventually reach a point where they can no longer expand without collapsing under their own weight. The global economy has reached that point. Every major central bank knows it, but none can say it out loud. Instead, they talk about soft landings and temporary inflation, while quietly preparing for a fundamental shift. Gold in this new system becomes the measure of honesty, the only financial instrument that cannot lie. Unlike fiat money, it cannot be printed. Unlike bonds, it does not depend on anyone's promise to pay. And unlike stocks, it carries no counterparty risk. That's why every historic currency reset, from Bretton Woods to Nixon's closure of the gold window, has revolved around gold's role as the ultimate equalizer. Peter Schiff, in his analysis, calls this a reverse 1971. Back then, the US left the gold standard to print money freely. Now, the world is leaving the dollar standard to return to gold. It's poetic in a way, a 50-year cycle of excess and correction. The next few years could mark the beginning of a financial reality where gold no longer needs to be defended. It simply proves its power through necessity. So what does this mean for investors, especially those watching this channel? It means education and timing are everything. Don't chase trends, understand them. The mainstream financial world will resist this transition until it's too late. But if you're watching closely, you can already see the signs. Central bank gold purchases at record highs, trade settlements outside the dollar, and the quiet but undeniable accumulation of metals by private investors. If the dollar continues to weaken and inflation keeps eroding purchasing power, gold and silver will not just protect wealth, they'll define it. This isn't about speculation or quick profits. It's about survival in a world where financial systems are being rewritten. Those who prepare now will emerge on the other side of this reset with not just preserved wealth, but real independence. As this transformation unfolds, remember that gold's true power isn't in its price. It's in its permanence. Long after currencies are replaced and financial models rewritten, gold will remain what it's always been, a store of trust, labor, and time. And with that, we wrap up today's deep dive analysis. If you found value in this breakdown, make sure to like, share, and subscribe to Gold Rush Reporter. Your support helps this channel keep bringing you clear, fact-based insights from a gold analyst's perspective, cutting through the noise and getting straight to the truth. Drop your thoughts below. Do you think we're heading toward a gold-backed system again, or will the digital currency narrative win? Let's discuss it in the comments. Until next time, This is Gold Rush Reporter, signing off. Stay informed, stay aware, and as always, stay golden.